Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you are absolutamente in the correct place. Let's go ahead and get our standard disclaimer out of the way so we can get on to some charts and talk about some trade setups. Tonight's topic is detailed mid-band boxes, how to see them, how to spot them, and how to trade them. So it's a very timely topic. So without further ado, let's get the disclaimer out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know that you do trade at your own sole discretion. All right. Tonight I'm going to, I've spent a lot of time over the past few weeks focusing a lot on the equity markets, namely, ES. We show a lot of ES, Russell. Occasionally I'll squeak in a little NASDAQ chart or even a YM chart. But tonight I'd like to focus on Gary's two favorite instruments, namely gold and crude oil. Quick show of hands, how many of you trade gold and crude oil? Either one or both? Show of hands from the team here. How many of you trade crude oil and or gold, either or both? Checking to see how many crude and goldy traders we got in here tonight. Quite a few. Wow. But here's what I want to say. I want to say that the entry techniques that we'll be discussing tonight apply to pretty much any futures instrument. So for you, I see that there's some folks on a free trial and there's a couple of new faces in here. So let me step back here. Kurt Turkey Leg. Hey, Kurt, I see that's you. Excuse me. So we trade intraday volatility of futures markets. So if you're in the live room, you've seen the following charts. You've seen ES in there, the E-mini S&P. Sometimes that's very range-bound and choppy, like today, till it finally broke out. We have gold, which we're looking at right here. We used to have the NASDAQ in there, but we replaced it with the Russell. This is the E-mini Russell futures, RTY, $5 a tick. Excuse me. Of course, we have crude oil, which is just recently rolled to the January contract. So those are the four charts we have. Now, we're connected to a data feed to our broker, which is NinjaTrader, and we're on the NinjaTrader 7 platform. That's what you're looking here. And the things that we run against the data feed, so we trade 4 range bar charts. Each bar is 4 ticks in size. Excuse me, it's a tickle in my throat tonight. Hold on. A little iced tea with some lemon in it handy. And so we have created indicators to help you see trades. So that is the background colors, the red, green, and intermediate color, transitional color. Bar colors, blue, yellow, and red. We have the 4 trends on the chart, the power meters, the predictors, which are the swings, and of course the alerts. The alerts are very good. They flash the bars. So for instance, when you're in an uptrend, you turn on the long alerts. And so when bars get near the mid-band, for instance, they'll start flashing. I'm going to leave that off because I really want everybody to kind of learn the basics tonight. That's where we're going to go with this. And if I put the alerts on, it's just going to show flashing bars, which actually do help you. And I do suggest you use those, by the way. Now, if you're in a downtrend, of course, you turn the short alerts on, mid-band, minimum criteria, and phantoms. And then, of course, the most prominent thing on here is the bands. We have 4 bands below the thick line here, which is called the mid-band, and 4 bands above it. The thin red line is called line 2, and the thin green line is called line 6. That's just above band number 6, okay? Now, the way we like to trade this is we are what's called retracement traders. So I'm going to show both types of entries, long and short, on the chart. In fact, I'm just going to put a quick text up here, and I'm just going to keep it really simple tonight, just super simple, because that's what I've learned over the years and working with so many traders all over the globe, that Y kahula a una simple y beta. What that means is that if you are in a, let's start with a downtrend. And we'll define what that is in just a second. That means you're looking for selling the market short. Sorry, I think I'm getting a little bit of a cold here, actually. It's freezing outside and windy too. And of course, you know that we take them on retracements or pullbacks. And of course, the opposite of that is when you are in what's called an uptrend. And here you're looking to take only long trades. You're buying the market on pullbacks into support and we are what we call retracement traders. Now, I'm not going to talk about range bound just yet. I'm going to focus just on long and short because both conditions are present on this gold chart here. I think this was the other day. I don't know. Well, here I can see what day it was. The 26th. So just to orient you, no matter where you're located in the world or U.S., we have midnight Pacific on the 26th would have been located right here. So of course you know that our equity market opens at 6:30. So for gold on this particular day, the prior day on the 25th would have been right here, 6:30, 6 Pacific. Gary opens the room at 5:55, and we run until 8. And then in the nighttime session, starting at 5, so the Asian trading session just started. And that runs all the way up until midnight right here. And then from this point forward, we go into the European trading session. And the cycle repeats itself to 6:30 over here, and then the U.S. equity market's open. So U.S. equity, Asian, to here, to this line. For you late birds or early birds, if you're located overseas in the Asian trading area. And then the European session starts here from midnight Pacific. And I think that runs actually until 8:30 Pacific. So I'm here in California. It's all Pacific time. So translate that to your local time zone. All right. Pop quiz to make sure everybody's awake. And over here on gold, when the market did this, what kind of trend did it go into? Up or down on that thrust? Just type in a U for up, D for down. And you have 4 seconds. I got a lot of material to cover here, so I'm going to rip through a lot of topics pretty quickly. So try to keep up. Just a U, up, or D, down. With this thrust on this arrow right here. 2 seconds. Just boop, U, D, up, doop, D, down. 1 second. This thrust right here. Time's up. D down. Good. Now, the types of trades that we advocate that you try to learn first are what are called mid-band trades. Now, I can show other types of trades tonight, minimum criteria, deep retracements. I will show a few of those, but that's not the primary focus of tonight. Now, before we can talk about the detailed entry part of it, what we have to do is we have to first determine what that is. So, can anybody help me out? What is a mid-band trade? What is it? So when somebody says, that looks like a mid-band trade setting up, what the heck are they talking about? In fact, let's put it right over here underneath our trend definition over here, right over here. All right, now I'm going to hit the text button, and I need to write something here. And so let's do it like this. Mid-band trades are what? Okay, I got an equal here. Now I've got to put something in there. What do I put in there? What are mid-band trades? What is the definition? Is it located in a particular area? Is it got to do something with the bars? I got to type something in here. Anybody know? What can I put in here? are ... Middle of the road. Okay, Benjamin, we got some answers coming in. Okay, so let's talk about that for a minute. Let's talk about what the concept of what a midband trade is, so we all get on the same page. Before we can even talk about entering them, you have to know what they are. So I see some good answers from Sebastian, Gene, middle zone entering, Sandra, good, Kurt, turkey leg there, James, Triphone, Bill W. Hey, Bill, good to see you. Byron and Joel, all with good answers. Good. Okay, good. All right. So in the case of the short, in the case of the downtrend, we are looking for a short entry or a sell located, and I'm going to define it as this: at or around the midband. So what does at and around the midband mean to sell short? Here's the midband itself. So at or on is pretty clear. That means the bars are physically actually sitting on the midband itself. Or inclusive of the band directly above the midband and the band directly below the midband, like such. Now let me ask you a question, collectively as a team. How do you feel about these bars located right in here? Do those bars meet the criteria of a midband trade, yes or no? In that oval. Okay, we just defined what that is. Bars that are immediately above the midband or immediately below the midband or on it. Well, let's take a look at it. Yeah. These bars are certainly, without question, in the band directly under the midband. This bar with the wick up here is sitting on the midband itself. So by definition, these bars constitute a midband trade short. So if we round out our explanation, and this would be true of both longs and shorts, the only difference being whether you're selling the market or buying it, because the location is the same, right? Are located on or around the midband. Good. So that oval is an example of a midband short trade. Okay? Good. All right. Now, when we go over here, and we'll get into the detailed part of the entry part first. We're going to do some little quizzes together where we're going to identify midband trades so we get really good at it. Because once you know when you see it, then we step right into the detailed getting in and out part. Okay? All right. Now, going into midnight on the 26th, at the tail end of the Asian session, we get a thrust in which direction? Right here. Oh, let me go back. I forgot to do one thing on the downtrend short side that I need to speak to before we can move on. Characteristics of a downtrend are as follows. You have a series of lower highs and lower lows where the market stair steps down. Generally, there is a preponderance of red bars over blue and yellow. However, there may be some yellow present and occasionally a blue, but that shouldn't throw you off. So here, for instance, and the midband and all the bands are stair stepping down, and the background should be a solid red color. Those are all characteristics of a downtrend, indicating to you as a trader that the types of trades you take are short. Now, the opposite of that is an uptrend. So characteristics of an uptrend are that the background turns a solid green color. The preponderance of the bar colors is blue, right? And the midband and all the bands are stair stepping up, like such. That's an uptrend. So let me ask you a question. Here's another yes/no question. Is this a midband trade on gold right here, yes or no? Long. 4 seconds. Is this box on gold a legitimate mid-band trade long, yes or no? 3 seconds. Just type in a Y or an N. It's that simple. I'm trying to keep the questions really straightforward, not complicated. It's either it is or it isn't. 2 seconds. Yes or no? Is that a mid-band long on gold? 1 second left. Cast your vote. All right, time's up. So I haven't given the definition of a long trade entry on a mid-band trade. However, it would be the same as over here because we wrote it down, right? We said mid-band trades are located at or on the around or on the mid-band itself, per this definition right here. And so we have to ask ourselves, where are these bars located? And the definition of that is the band directly above the midband, the band directly below the midband, or physically sitting on the midband itself, like such. And we can very clearly see that these bars enter the band above the midband, start to wick the midband itself. It doesn't actually touch it. It comes, well, maybe the wick of that one bipped it by a tick or something like that, but this is another example. So the definition of the trade itself is the same, whether you're long or short, right? We'd sit on or around the midband. So the location of the midband trade itself does not change. The only difference is what is the trend and whether you're getting short or long. Here's the example of the short over here, right? Here's the example of the long over here. Now, where I think it starts to get confusing, and, I might be going out on a limb here, but see if you concur, is that there are other types of trades that come into play, like minimum criteria trades and deep retracements and range-bound trading, which doesn't really have a trend to it. Now, in the beginning, what I would suggest, especially if you're just learning our system, you're completely new, or you're just learning how to trade futures, just stick with one trade entry type. Now, having said that, you have to realize that if you do that, there's times where you're just going to miss a lot of trades. But that's okay. What I would suggest is you just start with the basics. Starts with a mid-band trade. So that's what we're going to focus on tonight. Mid-band trade only. Is this a mid-band trade right here? Yes or no? I'm going to get quicker on these. I'm going to give you 3 seconds. I'm going to shotgun a whole bunch at you. 2 seconds. Just a yes or a no. Time's up. Yes. How about this one? Is that a mid-band trade? Yes or no? 3 seconds. You should just instantly start to know these. When you practice on your charts and you practice trading, you practice screen time. You watch the market go up and down. You see where it bounces. You see what direction it's going. You see what the background color is. What's the bar color? What's the midband doing? Yes. Let's keep with that theme. Let's keep going here. How about this? Is this a midband trade, yes or no? Yes or no? 3 seconds. Just a yay and for yes, and for no. 2 seconds. Cast your vote. One second. Is that box I just drew a mid-band trade, yes or no? 1 second. Time's up. Now, is the majority of the bars up in this area right here? Obviously, the answer is no. Did the tip of one of the bars bip itself into the I'm talking specifically about just a bip of that candle right there. Bip just barely into the thing underneath there. So the correct answer is no. The bulk of the body of the candles are clearly well below this band right here and below the mid-band and below the. Now, is that a minimum criteria trade entry? Is that a minimum criteria trade entry as per our definition? Yes or no? 3 seconds. Some of you might not know what minimum criteria is, and so if you don't worry about trying to answer these questions, because that might sound like a foreign language to you. Minimum criteria, what the heck's he talking about? Minimum what? Time's up. Yes, that is a minimum criteria trade. So just real quick, and I will explain that. So when you close above stealth, the thin sneaky snake line here, and in the case of the short trade, line 2, the thin red line, and all these bars do, yes, that's a minimum criteria trade. So if you were going to learn a second trade type, the minimum criteria in a trend, and that's important. Well, that's what it is, Alan. Okay, let me just. Some people are having a hard time understanding this, and that's okay. That's okay. You know, when you look at something new, it takes a lot of time. They say that you need 5 to 7 touch points minimum for most people to learn something new, right? Okay, so in the case of the short, the trend is down, right? We have the thrust has been down through support, and it changes the background red. The midband and all the bands are stair-stepping down. The preponderance of bars are red, yes? So we're looking for shorts. Here's the midband trade short. We all agree that that was valid, yes? Now, here the bars come not quite to the midband and not quite up into this area right here like this trade did and that trade, right? However, the bars closed above the thin red line, line number 2, and the stealth line, which is this little, it's kind of a little sneaky looking line right here. That's called stealth. See, when the market starts to get into a protracted move to the downside, the stealth will be red and it will follow the market down, and we use that for trail stops. Franz has a question. So we trade in midband. TP 24 or a little less, for example, 18. So 10 should be sufficient. What do you think? I'm having trouble following that, Franz. Can you maybe ask a favor, rephrase that question a little bit? I'm having trouble following that one. But yeah, the midband, you know, these bars would have to come up into at least this band right here to qualify as a midband. So if the bars came higher, you would say yes, that was midband. But the minimum criteria, you come into above the stealth, that little line right there, and line 2. This qualifies. So you can think of it this way. Let's step back for a minute and just think about what's going on here. When you have a retracement normally comes off of a swing level that is out at one of the outermost bands. Okay? So let's use this example right here. With this thrust, you've come down and put in a support level at 53.40 right here. Let me do it like this. Let me do it like this. Let me change this to a second here. All right. So here is where support has been established. 53.50. Now, what we found is that if markets, in order to give you a trade opportunity, if you're going to sell a market short, that there has to be sufficient distance for how far the retracement has gone to give you enough sort of quote-unquote meat on the bone, which is enough distance in ticks to get back to that level. So when you're looking to short up here, as you take it, you should in your mind be thinking to yourself, I want to get back to here, okay, on the short. In the case of the long, here, where do we want to get back to when you take this long? Where on this chart are you trying to get back to on this long trade? Well, what about this swing right here? When you take this long, are you trying to get here or here or here or here? Right. You want to get back up to that swing at least. Got it? Yeah. In this case, the top of band 8. In this case, the bottom of band 1. See? And you got it. Now, if bars only get, let's just sort of conceptually stick with me here. If you only get bars that come back, say, into here, like that, and rolled over, is that enough meat on the bone to get to here? Is by the time a bar closes and you get some slippage and you pay some commission, is there any meat on a bone for a trade to get into a trade on that bar right there, short? What do you think? Or would you want to short this bar right here? Here's some examples right here. Here, would you want to short that one? Would you want to short this one? No, you're too close to support, right? There's not enough distance. So pretty consistently on most instruments, if you go and you take a look at it, the distance between the outermost swing and the midband is normally between 20 and 24 ticks. So let's do this case of the rotation on the short for the gold. 53.40 all the way up to 55.70. How many ticks is that? 23 ticks. Let's do the long here. In the case of the swing here, you were all the way at 57 even, and the midband sitting here at 54.60, 24 ticks. See that? You see the distance? There has to be enough meat on the bone to get back to the swing. That's your goal. That's where your scalp trade is going to come off. Does everybody see that? Everybody see that? What I'm trying to show you there? So the reason it's called minimum criteria, let's go back over here in the case of this short, is because the distance between where you're hitting the edge of this above stealth and line 2 is 53.40 to 55.30. So you have, what is that, like 10 or 12 or 15 ticks? To get a scalp off from a kiss and roll up there short back to get back down here, which is your goal. Now, does everybody know how I want to explain a typical trade. Does everybody know what a typical trade is? How we teach to take the trades, if you can, with at least 2 contracts? Does anybody not know how to do that? I've shown it probably 100 times in the webinars. But if you don't know it, I can quickly explain it. No? Yes? When we say typical trade, what a typical trade is? How most trades should be taken, entering with 2 contracts? Yes? No? A couple of no's? Well, I'll quickly explain it. I'll do one for the short and one for the long. Okay? So what you want to do is you want to try to get what's called 2 contracts. So in the case of the short, you would be short 2, say on the close of that bar right there, short. And then from here, 55 to 53, this is probably at least 15 ticks, but you want to go 10 ticks. So what would happen is you're filled short here. And you get your scalp off somewhere, probably down here, close to where that swing is. Scalp means a short where you get a short burst of the market moving in your favor. Let me do the long example. Filled long on that bar right there, and you would try to get up 10 ticks. So you would have your first trade come up to here like this. Sticking with the long example, so you have 2, and then your initial stop is 12 ticks below your entry on a 2 lot. So 2 contracts, and if you use Object Trader tool using the boxes I have shown, it automatically goes 12 ticks below your entry and puts a stop down there. Once the scalp comes off at 8 or 9 or 10 or 12 ticks, in the case of ES, you might need to take as quick as 4, 5, 6 ticks because it moves only half the distance of the other markets, more active markets. And then in this case here, you want to go at least 3 ticks behind your entry. Right? At least 3 ticks. You can go more than that. You can go 2 ticks, or you can go 4 ticks, but at least 3 ticks. So now you have what's called a free trade. And you have your runner. So you have the runner. And the runner would be the one that you let run with the market. So here's your runner. Now what happens is that after this continues to move in your favor, let's look at the example of the long trade. Why don't we want to just take our stop right to where we got in? Why don't we want to do that? Or come slightly above it. Let's just lock all that profit in. Let's go way up here. Let's put it way up here. That last contract. Got our scalp to 10. We filled 2 here. Got 1 off. The other one was down here. We don't want to leave it down there. We're going to get it up here. Object Trade will do that for you. Or you can manually do it if you have limit orders you're trading with. Just crank it up. Why not? Here, let's look at that short. Okay, you got filled 2 short here. Right? Got your scalp off here. 2 lot short, buy to cover on your short was up here. Your initial stops, right? Initial stops, you always have those. Well, crank that down. Get that last contract. Crank it down. Crank it down into here. Oops, uh-oh. Uh-oh, what happened here? What happened with the bip of that little candle there? Yeah, wicked you out. And then what happened? You missed that big short. Oh, ouchie. Oh man, I got a scalp, and then the thing dropped from 55 down to 50. That's 50 ticks. That's 5 bones a contract. If that happened to you, could you have re-entered it? What do you think? If you got bipped out here because your stop was too tight, could you have re-entered this trade? Short. Yes. Right. Exactly. So in a nutshell, how this works is, if you can, you always want to put 2 lot on. You want to put 2 contracts on. Your initial stop is going to be usually either 10 or 12 ticks above in the case of the short or below in case of the long. You want to get back to that outermost swing, whether it be the top of band 8 or the bottom of line 1. And that would be your scalp trade. You take that off, and then your final stop comes, and you fade that by a couple of 3, 4 ticks because you normally get some kind of pullbacks. This pullback here didn't get close to your entry. So you could have actually started to trail the stop up like this on your long trade, like that. That's it. See how stealth follows it up and line 6 follows it up? Now you engage the trail, and then ultimately that long trade stopped out on your runner right in here. So when we say tight and loose stops in the room, the tight stops are always going to be located, in the case of the long, at line 6 or stealth, which if you do too tight, and this is a little bit art and science, the trail stop thing. I don't want to get bogged down too much in that. I want to stay focused on mid-band trade entry, but not to go down a rat hole. But you can see right here, a lot of times it'll wick it, right? So you got to learn to be a little loose. Don't get too greedy. Just let the market move around a little bit, and see, you would have left all this on the table on that long trade if you choked it off too short. You got to leave it loose. Now, after a market's moved 50, 60, 80 ticks, you don't leave it loose. You crank it down, right? Because you want to lock that down. Hey, Louie, don't worry about it, buddy. This is all recorded. We'll have it up on the web and give it to everybody tomorrow. I see a bunch of people came in late. Don't worry about it. It's all recorded. If you have to leave early, don't sweat it. We'll get you a copy tomorrow. No problem. Okay, so I think we've covered the basics. Does everybody have a good handle on how and where mid-bands are located and how to take the trades? Where your initial stops are located, where your scalps, where you take your 1 off on your scalp, right? And how you trail it when you get a runner, how you trail it on the long when you get a runner, right? That's just standard. When we say that's the standard entry type and how you manage your trade, that's how you do it. Okay? Yeah, good. Any questions on that? Because I'm going to start moving quickly into some other things. We're all clear about mid-band trades, where they're located, and how to take them. All right, good. Now let's zip on gold to today. Let's look at what happened today and how you could have traded it. Oh, that was today. I thought that, oh yeah, okay, today's the 26th, right? 27th, 28th, 29th. Yeah. Oh, okay. So I was showing this morning. There you go. Like that. Here you go. Yeah. Yeah. Okay. So yeah, this was the pre-market. Let's see, 559. Gary had opened the room right in here. 555 would have been, oh yeah, there's somewhere right in there. Okay, good. I had the short here at 630, broke down quite nicely. Now, was this a mid-band trade here, yes or no? What do you think? These bars right here. What do you think about that? That box. Three seconds. And am I trying to challenge you a little bit? Yes. That's not an easy one. It might look easy, but it's not as easy as it looks. Okay, 2 seconds. Just a simple yes or no. That box is that a mid-band box trade on gold? Could you've taken that? In fact, let's do it this way. Let me help you out a little bit. I'm not trying to trick you. I'm really not. But let's look at what it would have looked like when it's set up. It would have actually looked like this. That would have been about 6:43. So you're about 13 minutes into the U.S. Equity market trading session, and Gary would have had the room open for like 48 minutes at the time this formed right here. All right, time's up. Technically, yes, it is a midband in the fact that the bars are sitting on the midband itself. So from a definition perspective, it meets the criteria. However, the problem here would have been at the time that this box formed, would you have been thinking long or short? Here. Would you have been thinking long or short at the time they came up to the midband? Look at the background. Look at the bars. Look at what the market's doing on gold. In fact, to help you out, you had just stopped out of the short from that box up there. So you just stopped out of here. In fact, I think I took that short. Did I take that short? I think I did. I can't remember whether I got the box or I got that kiss and roll, but I did. I believe I got this one. Yeah, you probably were thinking short because the background at the time that occurred was red. And I think Gary had a line down here too, didn't he? I think there was some support level we had called out ahead of time. It's kind of down here somewhere, remember? We came within a couple ticks of it. I think it was like 40. Remember? Yeah, some of you remember. Yeah. So we had a support line down there that bounced very precipitously right off. Yeah, so you were thinking short on the retrace. You never got the short. It just ripped right through there. So even if you put a box, it would have never been filled. And at the time, I don't think, given the background and what it was doing, I don't think you were thinking long. So there was massive short covering, and then some kind of buy program kicked in here. Remember? Yeah, it came within one tick of that line. I think he had a line at 49.40. That's right. It came within one tick of it. He went back several days, and we looked at what that next significant level of support was, and it came within a tick of it. In fact, I think he dumped his down here. I believe he did. I think he had two short like I did. He dumped one off here and then got stopped out, and I got stopped out. Yeah. So no, and it just ripped through here. There was really no way to throw a box on there. And even if you did, you were thinking short, and it just blew right through it. I took the volume off, David. I know I normally have volume on there, but we got a lot of new folks in here tonight, and I didn't want to confuse it with having volume, so I just wanted the charts to look just like you have in the room. But there was a huge spike, yes. There was an exhaustion bar of selling. You had like 4,000 contracts were shorting. That's called selling exhaustion, followed by several blue up and down up bars that just pushed this market precipitously up. Now, that being said, you already got a snapshot of what happened if you remember what you just looked at. Now, I'm going to advance the chart, recreating real time on gold this morning, and you tell me, and I'm going to help you out. I'm going to say it's going to be long trades, where you think you would get long by typing in the letter L. Are you ready? Here we go. Remember, when you think you see a long trade entry, you type in the letter L. Here we go. starting at 649. Okay, advancing the chart. 656, looking for longs. 702. 705. 706. Recreating gold in real time. Looking for long trade entries. 708. 712. Some of you might be completely new to this, and so if you are, don't be intimidated. It takes a little bit of time to pick it up. So just try to, sort of grab onto what you can. And then the more you watch it, and the more you see it in the live room, and the more it'll come to you. Okay, here we go. Continuing on. 721. Room's still open. Live room is still open. 740. 745. 748. Okay, now we're at 752. Coming in right about when we're getting ready to close the room at 8. Still got about 8 minutes left here. Looking for longs. Long entries on gold. You would signify where you would get long by typing in the letter L. Okay, 753, 754. Spending a lot of time. This is actually going probably 500 times the real market, right? Because I just take 5 seconds to show what would have been 5 minutes. Okay, so let's go back. 748, 749, 750, 51, there's 52, still in live room, 754, okay, 56, there's 8 o'clock, getting ready to close the room up. I think we stuck around a little bit for the tail end here. There's 8:28. All right, I'm going to stop it right there, 8:36. Now, I want to be clear about something. There was a small handful of you, and I think that some of you might be a little bit on the newer side. When I started this exercise, the bars were here. And I saw some of you type in, I want to address this quickly because it's important. You typed in L for long when the bars were up here. And that's not correct, okay? So when you're in an uptrend, the bars, the thrusting part of the move is a push higher. So when the market's still going higher, that is considered in an uptrend the thrusting part of the move. You need a retracement. Okay, so you get a little retracement here. So in this retracement here, is this meet the definition, these bars right here, of a minimum criteria long trade on gold? These bars right here, yes or no? Is that a legitimate minimum trade long, yes or no? 4 seconds. It's a yes or no. And you know the definition. You heard it a few minutes ago. Remember what it was? What was it? What 2 things had to happen for you to get a minimum criteria entry long? 2 seconds. 1 second. So yes or no? Is that a minimum criteria entry long on gold? 1 second left. Yes or no? All right. Let me help you out. Let me circle back and try to help you a little bit. How about let's look at another one that's close to it. It happened only a few minutes after, maybe 10 minutes. How about these bars right here? Is that a minimum criteria, yes or no? Per our definition. On the long side. Now let's look at the difference. Think about the difference between these bars here in this little box and the bars that formed here in this larger rectangle. What's different? Is that legitimate minimum? Or is that? Or are they both? These the same? I'll give you 2 more seconds. Look at the differences between the two, right? All right, time's up. Let me help you with this one first. This is a no. Let me blow this up real big. So I don't want to confuse anybody, but this is important. It's subtle, but important. And a good portion of trading success is paying attention to detail. Now, if you're not a detail person, that's okay. Everybody's not a detail person, or you just get the details. Sometimes you got to learn the details. You got to learn how to see the details, and that just takes screen time. That's all. Once you understand what you're doing, then you just have to see it repetitively, and you'll get it, right? Okay, so checking the boxes. Did we close below line 6, this thin green line? Yes, we do. Check mark 1. Do we close below the stealth line, the green sneaky snake line? Do we ever close below it on any of the bars? Is that check mark box yes or no? Looks to me like a negatory. So the two requirements for a minimum criteria trade, the second one was not met, correct? So the answer has to be a no. That's a no. That's a negatory. Your swing, and think about it just sort of intuitively here, right? Your swing is right here. And you've only pulled back to here. Now, did it turn out to be a good trade? Well, the buy programs were pushing gold, precipitously up. I mean, it's just on fire. So did it work out? Yes, it did. Of course. Do they all work out? Not always. You got lucky on that one. Now, the difference here, clearly you were sitting under line 6 here with all of these bars, and stealth was broken. This is the clean, clear definition of a minimum criteria that turned out to be a great monster trade. Good. Good. Most of you got that. Almost all of you got it. Kudos. Good for you. Now, what I was surprised to see was that many of you, I'm not going to name any names. So now you have the benefit of a static chart. See, I think what you're probably seeing, and the more you look at this, is that when we go to recreate real time, what in effect we're doing is the bars are moving. The market is fluid. We're looking at it as how it occurred. When you and all the traders and everybody in the room and Gary and me and the God and country, the bars are moving. It's not a static situation, right? It's easy when it's just sitting there right in your face. Let me give you an example. Now that I freeze the chart here, I'm going to ask you a question. Is this a legitimate mid-band long trade on gold here, yes or no? Now that you see it and it's static, it's not moving. The bars aren't going up and down and all over the place. That's where I think most people get the challenge, right? The challenge is, Charles, when I'm sitting here and I'm calm and I'm all relaxed and the bars are, you're showing the box thing and the mid-band and all, I get it. But when it's happening in real time, I have trouble with that. I struggle to see it. Yes, the answer is yes, of course. The definition is at or on or around the mid-band, and the bands directly above it or right on it. So that was our definition, right, of mid-band trade entry, or physically on it themselves with the bars. And do these bars come into this band? Yes, of course they do. They're right there. Right? So here's your thrust. You got stopped out of the minimum criteria long, somewhere in here. You're looking for re-entry. And sure enough, you're coming right into the band right there. That's textbook. Everybody get that? Everybody see it? Took off. Your goal was to get to where with your scalp? Yep, right there. Get your scalp off out of the box. In fact, I think I called that one out, as I recall. Didn't I call that out? Anybody remember that? I said if that retracement on gold gets anywhere near 57.90 and bounces, that's a good long trade. And I said that, if I recall, when the market was up here. Anybody remember that when I said that? I happen to be long gold. I believe I got in on this one. And I was trailing my stop, and it was just getting ready to take me out. And I said, I'm going to stop out, and I'm going to get right back in if that thing comes anywhere near the mid-band. So I see some of you remember that. We're in the room when I said that. Yes, I did that. And so that, I'm trying to help everyone, out. That is how I've come to learn, anticipating ahead of time where trade setups might set up. And I'm gonna have a 2-part series next week that's going to speak to that. So here's a good way you can do it. Let me show you something here real quick. This is a really good way to do it, okay? So a market is running away. Could be any market, whatever you trade. Could be crude, could be anything, right? And you're watching it go up, and maybe you're in it and maybe you aren't. But if you aren't, I understand you might get a little sort of sick feeling in the pit of your stomach, like I'm missing this thing's run, 40 ticks, and I'm missing the huge run of the day. Now, here's what I do. And I'm going to show it to you like this. When the market breaks this swing right here and starts to break, can you see, I'm speaking to this part right here, this specifically this part right here. Can you notice that the mid-band and all the bands are now stair-stepping up like this? See them? Here's line 6. Here's the mid-band. Can you see it tracking up, tracking up, tracking up? You got the stealth. See the stealth? Now, if you were tracking this with, your cursor or your eyes or whatever, when you get to the apex of this push move up here, where is the mid-band sitting? It's sitting right there. Now, if you're not in the trade, should your eyes, and I'm going to give you a pop quiz here. Do you think your eyes should be here? Or should you be focused on this area down here? If you're not in this trade, you're not in it, and you're thinking about entering, should you focus your stream of thought and trade entry sort of consideration? Should it be focused up here, or should it be focused down here? Right. Good. You should be, and it's hard to do. It just takes time. This isn't something you're just going to go look at a chart tomorrow morning and go, oh, yeah, I see what he's talking about. No, you're going to have to practice this. A lot of practice. But once you get it down, this is where you can start making some money. Because, in effect, if you think about it, what you're looking for is not the thrust, because you didn't get that trade, right? You're looking for a pullback. And so there isn't any mystery to it. The reason I gave you that number was because that is all pretty much exactly where the mid-band was sitting at the time when the retrace started. See it? See it peeking out? Now, I do use the swing high in the morning and the low, and I use the open, and I do use that volume down here. And I watch for those spikes in volume, selling exhaustion, and then I look for red sell bar. Here, let me see if I can get it up. Let me show you this instead of just talking about it. I try to hold off on doing this because I don't want to confuse anybody. It's a standard out-of-the-box indicator called, what is it called? Volume up-down. Just go down to the V indicators, go down to V, and look for volume up-down. It's just volume up-down. It comes right out of the box with, here it is right here, with Ninja. Okay, let me see if I can explain this without confusing anybody too much. Stand by, it's loading. Don't lock me up. Don't lock me up. Don't lock me up. All right. Here's exactly what I want to show. Here's what I want to show. And this takes a little practice too. This isn't something you're just going to look at, like put this on your chart and be, oh yeah, I see what he's talking about. Yeah. Okay. Where in here do you see as selling exhaustion bars? Anybody? I'm going to answer your question, Louis, right now. Where would selling exhaustion bars be? And where does the selling start kicking in? Buying exhaustion. Well, let me help you out because some of you are looking at this for the first time. What about these bars right here? Are these bars larger than all the bars around them? How about this one right here? The highest one of them all. How about that one right there? What about that one? Now that you see it, what is happening with these bars right here? Is there continued more big buying right here? Or are they a different color? Are they red? Are these bars now starting to turn red? What does that mean? Well, what it means is that at the apex of this move, you have an exhaustion of buying. In other words, all the buyers are kind of the buy programs are exhausting themselves. They're pushing all the buying, as much buying here. Let's do another example. Look at this acceleration of selling to the left, right here. Now, when you get to the apex of that sell-off, what happens right here? And then, what colors do these bars turn right in here? Can you see the shift? Can you see the shift in momentum and in the volume of what's happening? This is all red. This is acceleration of selling. The seller programs are in control of this market. No question about it. You get an exhaustion spike, and then buy to cover kicks in, a little bit of buy to cover, and then buy programs kick in. Everybody see that? That's how you use that. Let's advance it. So here you're starting to get a little bit of buying coming back in. Here is when it comes down into this area here, the buy to covers have kind of exhausted themselves. This is profit taking. That's what this is. So all the buyers, everybody that was long from down here, now whatever they got in, all this different profit taking, and then what happens? A little bit of buying kicks right back in, right there. See it? Where does the market go? Back up. See all the buying kick right back in there? See it? It's right here. There it is. So when you see, I don't really, you sort of use this. I can honestly say I don't think that this, because a lot of times I'll observe this sort of after the fact, or I might see a bar spike. If I'm lucky, I might see it spike right there, and it can be a red flag to me after a big move like this buying spike right here, and then you start to see the red come in with all this profit taking right here. And now you're coming right into the midband. You're looking right where our eyes were focused. Remember I said, gets anywhere near that midband and bounces, take the long. So our eyes are focused right here, and sure enough, come right into our little trap. You know what I'll do is in the two-part series, not this week but next week, I have a Thursday evening at 5 and a Saturday morning at 9 a.m. I'm going to do a two-part series on this very topic, where we will look at positions of markets are located at the time we're looking at it, and then I'll help you focus on where you want to get in on a retracement. And this is a good example of one right here. Right there, like that. Which is what I use every morning to figure out where I'm going to get in. Now, they don't all work out, right? They don't all work out. I mean, sometimes, if you're looking at NASDAQ or YM, sometimes crude, they'll go much deeper. Instead of stopping here, they'll retrace and they'll go all the way down into here somewhere, way out there. That's called a deep retracement or a phantom. Gary likes those a lot. I'm not personally a big fan of them myself. I rarely take those. Yeah. I don't think we can really change the algorithms, Louis, and the bar colors. They are what they are. You're going to notice that when you get these mid-band retraces, a lot of times the bars will turn yellow. But that doesn't, it doesn't really affect. We really make our decisions on swing levels, where the market is located relative to support and resistance in the swing levels that it's gone to, and where the mid-band is. That's the primary part of our decision making for trades. Benjamin? What was your question? What do you do in that case? Which one? Are you asking about deep retracements? Here, I'm going to go ahead and we're pretty much done. We're running over 6 o'clock. Let me just go ahead and stop the recorder.